Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Calm before the storm. Markets are steady ahead of a big week of earnings and data as Mag 7 hits a 3-month high. Behind closed doors, Elon Musk is said to have been in regular contact with Russian President Vladimir Putin since 2022, according to the Journal. And fashion merger blocked. A U.S. judge sides with FTC, halting Tapestry's $8.5 billion bid for Capri. Good morning, Manus.
Danny, good morning. We'll talk about mid-market bags in a moment. Stocks up an eighth of 1%, still trying to claw their way back. Day two of tepid gains. Overall on the week, S&P 500 down at this stage just under 1%. So it's going to be the first weekly drop in 7. Keep an eye on some of the stocks that have moved for various reasons. I mean, I just say wow on Tesla, up 22% yesterday, $150 billion added. Down 2 1/8 this morning, giving a little bit back. The Mag 7 at a 3-month high. All the heavy hitters come next week. Services are the highest since 2022. New home sales rising. Keep an eye on Capri, down 45%. Lena Khan has had her way with the FTC and decried the bag combo. Roll it over, have a look at the bond markets. In the space of this week, we're up another 10 basis points on the 10s. But there is a sense of exhaustion. Yields just dropped by 1 basis point this morning. The question is, are the bears, that bear attack, is that running into a little bit more of an exhaustion point?
Well, it's certainly a tough prospect for the next couple of weeks. It's earnings ahead. You have jobs next Friday. You have an election. You have a Fed decision. So what do you do in the meantime? Bank of America writing this morning that people are just sticking to their guns. They're sticking to gold and AI. They want to go with what they know and what they have conviction about because the rest is so uncertain.
And those who are very uncertain are going into money market funds. Money market assets rise to a fresh record of $6.5 trillion. It's the institutional money that drives it in the first instance. I think at this stage, people are sort of hedging and almost over-hedging. Geo Macro Market Pepich says you want to be short duration into this election. That is his main hedge for now.
And if all else fails, wears pink. Did you do this on purpose?
She
did you see what I was going to wear?
I assure you, I did not get the roster. She said
sure, man.
We're matching, but let's see what Mark Haefele's got to say in terms of not what we're wearing, but what we're saying. He is, of course, over at UBS, and he writes this: reducing your equity exposure in the wake of a disappointing election outcome is likely to be counterproductive over the long term. We would caution against knee-jerk or simplistic assumptions of equity market outcomes based on individual policies. Pleased to say Mark is with us now. He is the CIO of UBS Global Wealth Management. Mark, good morning to you. Hold your nerve, remain invested into the headwinds of politics. Good morning. Is that the message?
It is the message. Vote at the ballot box, not with your portfolio. There's so much emotion in this election, but when you look at the data, it's very rare that a presidential election is really going to have a longer-term impact on your portfolio.
So, Mark, just the here and the now, and setting aside the election, as you say, not going to have an impact. You've upgraded U.S. and global equities. They've already been on a tear. We're nearing 50 records year to date. Why the upgrade?
Well, one of the big things is the revisions that have happened in U.S. data. So take the emotion out, look at the data. You're seeing that actually GDP in the United States has been stronger, the savings rate has been stronger, and that real incomes are positive. So we've upgraded the chance that there is no landing in the United States, and with that, we're more optimistic about U.S. equities and global equities. And then what's happened in China has taken out some of the tail risk. So that's another reason that we're more positive on equities from a probabilistic outcome standpoint.
Well, we'll get to the China point in a moment, but let's expand on your no landing thesis. There's been quite a spike in the bond markets. People are saying, Bloomberg have run the numbers. They said 20, 30 basis points of that move is down to monetary policy. The other part of it is down to the no landing thesis. With that no landing, Mark, does the Fed pause and do yields trade higher?
Well, we don't think that the Fed is going to pause. We still see another 50 basis points this year. But of course, if they did pause and said it was because they think the economy is not going to land, I don't think that would be taken so badly by the stock market.
Mark, when it comes to the bond market, though, we are in this period where you have a Fed that cut some 50 basis points. And 10-year yields since then have moved nearly 50 basis points higher. We've talked breathlessly about reinvestment risk, that you need to get into the bond market, that yields are coming down. What does it do to investor psychology and really your clients when you tell them about reinvestment risk, yet they've just lived through a period where that didn't play out?
Well, where we've focused our attention is saying, look, given that the Fed has started this cycle and that many central banks have started this cycle, you do have to look at your cash holdings. How's that been working out for you, especially when we see the prospects of no landing? And if rates continue to fall, where are people going to be redeploying that cash? And certainly some of it you want to get in front of it. So you don't have to do it out at the 10-year duration. You can do it in more near-term duration, but that's certainly something that people should be considering. And again, some of that move may be because of better prospects for the economy, but we've seen a Trump trade in equities, and perhaps some of that is a bit of a Trump trade in the bond market at in the 10-year, because people are unsure about how much stimulus might come into the economy.
So if those two reflect quasi-Trump trades, what is gold telling you? Mohamed El-Erian's op-ed in the FT I thought was interesting this week. He talks about the rise in alternatives to the dollar, and he questions the whole system. You see gold as attractive, but why?
Yeah, several reasons. Invasion of Ukraine. For some of our clients, that was something of a weaponization of the dollar system. So that's number one. We do see central banks increasing gold holdings. The cost of holding gold, the opportunity cost, comes down as interest rates fall. And, you know, it remains this hedge for these uncertain outcomes that people are concerned around the election.
Mark, when it comes to election night, hopefully you'll be asleep because it'll be quite late for you as results are rolling in. What are you telling your clients to do on that specific day? Is it a put the numbers away, don't look at it, come back to it in the next few weeks?
Well, you know, I think that getting some sleep on election night makes some sense, because we're unlikely to know the results as quickly as you know, we normally do. Not saying it's going to take weeks, but it might take a while to count some of these votes. Obviously, what happens with the Senate and the House is also important. But I think what we always try to do is pick our spots, have our scenarios lined up, and then if there is really an outside move, then we would try to take advantage of that, because you don't know what's happening. But generally, you know, just reacting to the headline, that's a mistake.
Well, certainly in 2016, it was in the very initial, if you remember 2016, it was very initial, you know, stocks negative, and then 24 hours later, it was very different. One scenario that we haven't really touched a great deal on is a blue wave, you know, which some people say is tears for the stock market. But I just want to talk about disruption. The risk is disruption or a contested election, and that, Mark, can present some massive opportunities. Is that sort of a scenario that's on your radar?
Well, I think it has to be. I certainly remember back to Bush Gore and the way that made people feel. But that's just a short-term disruption. The idea of a longer-term disruption, I obviously that would make the market sell off. I think that's a low probability event. But you want to be ready for things.
Well, here's to hoping in a little over a week's time we can all get some sleep. Mark, thank you so much. Mark Haefele of UBS Global Wealth Management. Enjoy the rest of your Friday and your weekend. Let's get to some of the other top stories now trending on the terminal this morning. A federal judge has blocked the planned $8.5 billion acquisition by Tapestry of rival Capri. It's a major victory for the FTC, which had said it would harm competition in the market for accessible luxury handbags. It does come somewhat of a surprise. Many observers of the hearing had predicted the FTC was more likely to lose the case.
Mercedes plans to step up cost reductions after weak China demand and fierce competition hit its profits. The results are a blow to the core of the car maker's strategy to help fund its transition to all-electric future. It didn't elaborate on where the cuts would fall.
Yum Brands and Burger King have removed onions from some of their locations. The restaurant industry continues to investigate that E. coli outbreak, which was first traced to McDonald's earlier this week. Yum withdrew fresh onions from some Taco Bell, Pizza Hut, and KFC locations, quote, out of caution. They did not disclose, though, which stores and regions were affected, or did they name suppliers.
Coming up on the show, Elon Musk has been holding talks with Russian President Vladimir Putin. That's according to the Wall Street Journal. More on the story next.
And we're going to get more into election risk. We're going to be catching up with Phillip Toews, of CEO of Toews Asset Management. All that to come on your Bloomberg Brief this morning.
She deliberately dismantled our border and threw open the gates. She threw them open. The gates to an invasion of criminal migrants from prisons and jails, from insane asylums and mental institutions. We're a dumping ground. We're like a garbage can for the world.
Someone who suggests we should terminate the Constitution of the United States of America should never again stand behind the seal of the President of the United States of America.
The race for the White House is now down to 11 days. Both Donald Trump and Kamala Harris are cautioning voters against their opponent. One of former President Trump's biggest supporters, of course, is Tesla CEO Elon Musk. The Wall Street Journal reporting that Musk has been in regular contact with Russian President Vladimir Putin since late 2022. Joining us now is Bloomberg's chief political correspondent, Anne-Marie Hordern. So, Anne-Marie, we have the world's richest man, one of the biggest political donors and government contractors in contact with Putin. Just how do we make sense of it?
Well, this is going to raise the concerns the national security community will have about really Elon Musk's outsized presence in this space, and also the access he has because he has these government contracts, because he's dealing with the Pentagon and NASA. He does have a certain level of security clearance. And now the Wall Street Journal is talking about the fact that they've shared a few phone calls. Elon Musk said in 2022 that he has spoken to Putin. The Kremlin came out and said there was only one conversation. The Wall Street Journal says there's been more. There's been more with other officials around President Vladimir Putin, like Sergei Kirilenko, his first deputy chief of staff. And I think one part of the story that's going to get a ton of attention is that the Wall Street Journal says that Putin asked Elon Musk to not activate his Starlink over Taiwan to help out his friend Xi Jinping of China. And I think that's going to get a lot of concern around the national security apparatus in Washington, D.C. But also, Danny, to your point, the fact that this individual also has been playing an outsized role when it comes to the campaign right now in terms of his support for former President Donald Trump, physically on the trail, and also just the tremendous amount of money he's throwing behind him.
Just when you mentioned the money, I mean, he's all in now at $156 million. He's just made another slug of money. Maybe the bigger question, and this is something, well, let's see how the Harris campaign capitalize on this, which is the outsized influence of Elon Musk financially and in terms of relationship and a role in government, certainly with two of the main adversaries of the United States of America, which is Russia, and, of course, on a trade level with China.
And this money is not just to help Donald Trump get back into the White House. He's also donating to Republican House races and Republican Senate races. Also, he talked about this on his earnings call when it came to Tesla, the fact that if he would have this DOGE part of government, the Department of Government Efficiency, he would like to run it, and almost alluded to the fact that one of the first things he would like to do is have a pathway for autonomous driving. So he's really firing on all cylinders in terms of potentially his impact. It's hard to think of someone else who's doing the same in terms of the national security clearance level. I would say Mark Cuban on the Democratic side is a billionaire who's really out there campaigning for Kamala Harris. But Elon Musk seems to have an advantage that no one else seems to have within either of these parties.
Right, and his billions are a lot more, to be fair, too. Trump this weekend, he's going to be at MSG. He's also going on the Joe Rogan podcast. These are the type of events that in previous election cycles, we would say there's no way a Republican's going to be in New York City. There's no way someone would go on this type of podcast. Just what does it tell us about where we are in the race?
No way a Republican is going to win New York, and no way a Democrat is going to win Texas. But you see both Kamala Harris going to Texas, and you see Donald Trump going to Madison Square Garden. Evan Roth-Smith, a pollster, joined us this week, and he said this is about the shock and awe effect in headlines. The fact that we are sitting here right now and saying, why is Trump going to the Garden? Why is Kamala Harris going to Houston, Texas? Why, just, a little over a week out from the election, are they using their time in states they cannot win? It is that shock and awe effect, and it is the fact that maybe this is how they can win a news cycle.
I just wondered where you get more bang for your buck, whether it being with Springsteen or Samuel Jackson, or whether it's being aligned with Elon Musk, the entrepreneur, back on the economy, doing things. I mean, it swings every which way. Avoid Madison Square Gardens on the traffic this weekend. I think we can all take that for the weekend. Anne-Marie, thank you very much. Anne-Marie Hoare down there tracking the latest political stories. Let's turn our attention a little bit more closely to China. Beijing's economic stimulus failed to impress global leaders in Washington. This is as they wrap up their annual IMF World Bank meeting. They're calling for a clearer plan to boost the economy. Jill DeCease is with us. Jill, good to have you with us. I mean, this is about being underwhelmed and the serious risk, according to Yellen and others, that China could really not make their growth target. So this is a huge concern for them this week in Washington, I should say.
Yes, Manus, and I think it goes a little bit beyond that. So, what we've seen from China over the past month and a half or so is a tremendous amount of stimulus, particularly on the monetary policy side. That's really actually what got markets so excited all those weeks ago when we first started to see this rolling out of, promises for additional rate cuts, cuts to reserve ratios, all of that kind of stuff, this monetary policy easing to kind of help things along. That seems like it might be able to get China somewhat close to its growth target of around 5% for the year. But what we've really seen in terms of disappointment since then is any follow-through on the fiscal policy side. And so that's also what we're seeing echoed among a lot of finance ministers and central bankers in Washington. You just referenced U.S. Treasury Secretary Janet Yellen talking about how a lot of what she's seen out of the stimulus package from China so far doesn't really do a whole lot to address some of her major concerns about the economy, whether that be overcapacity concerns that the U.S. has certainly levied against China for at least the past year now, or whether that be issues about domestic demand within China and whether that's actually set to improve. We're really not seeing that, and that's kind of what we have seen echoed among a lot of these central bankers and, again, other finance ministers in Washington, D.C. this week.
So then it's a market, Jill, that just keeps waiting for any more announcements, any more sort of bazooka that could come. Are there more opportunities on the schedule for Chinese lawmakers to do that?
Yes, well, Danny, just within the last hour or so, we actually got an announcement from Beijing that the Standing Committee of the National People's Congress, that's really the top legislative body within China, is hosting its next big meeting. It's going to be November 4th through 8th, so right in the middle of that U.S. election cycle there. But that's really the next opportunity that China has to discuss and then ultimately announce further policies that could actually help the economy. Now, it may be the case here, Danny, that Beijing, Xi Jinping are really kind of waiting on the outcome of the U.S. election to actually make decisions there, because you have to think that if you're China, if you're Beijing, you want to know whether or not it's going to be Kamala Harris, maybe sort of status quo when it comes to China, or whether it's going to be Donald Trump, who has promised, levies of up to, 60% or so on Chinese EVs, other types of technology there. I mean, who's in the White House could potentially make a pretty big difference in terms of how you might want to calculate a lot of your economic policy. But yes, I think within the next couple of weeks, it does seem like we'll have another opportunity for Chinese leaders to sit down and actually discuss whether or not they want to roll out more stimulus here.
It is remarkable how much of this world is just waiting for what happens in 11 days, and probably will take some time after that to know what actually happened. Jill, thank you so much. Bloomberg's Jill DeCease there. Coming up, 43 years in the making. Yankees and Dodgers going head-to-head in the World Series. But if you want to root for the home team, sorry, it's not going to be cheap. We'll discuss up next. From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger with Manus Cranny. Let's set your agenda.
A calm before the storm. Markets are steady ahead of a big week of earnings and data. The Mag 7 hits a 3-month high. Behind closed doors, Elon Musk is said to have regular contact with Russian President Vladimir Putin since 2022. That's according to the Journal. And fashion merger blocked. A U.S. judge sides with the FTC to halt the Tapestry's $8.5 billion bid for Capri. Handbag wars, Danny, handbag wars.
Coach, Versace, Michael Kors, no stability for them, but stability for risk assets yesterday and this morning, up about 1/3% for most markets. Russell 2000 outperforms. Perhaps all thanks to Tesla yesterday. Just to put in context, $154 billion in market cap added. That's more than the value of Ford, GM, and Stellantis combined. It's a pivotal few weeks. In the meantime, treasuries are rallying with European debt yesterday and this morning. We're down by about a basis point across the curve. 10-year yields back below 4.2%. But Manus, it is a pivotal next few weeks. Earnings, jobs, elections, 11 days away.
It is indeed. And you talk about the size and the rally in Tesla. Just think of the size of NVIDIA. It's the size of, 5 G7 countries. And that's going to define, it's not next week, but it is in a couple of weeks. I think Mark Haefele made a really clear point, which is don't knee-jerk reaction to the U.S. election results. Don't falter. Stay invested. And indeed, they've upgraded their view on not just U.S. equities, but global equities as well, going into the eye of the storm.
Well, again, I go back to Bank of America this morning with Michael Hartnett saying what people are doing around this election is they're not necessarily stepping back. They're just going further into their convictions. Convictions this time around being gold and AI.
Yeah, and there's been a lot written about gold and record highs between Mohamed El-Arian and indeed UBS Wealth Management like gold as well. Whether it's an inflation hedge or an election hedge, you take your choice.
So Mark Haefele says don't overreact, don't get emotional, but we are 11 days away from the election. Joining us now is Phillip Toews, CEO of Toews Asset Management. Phillip, you have very strong opinions as to what will happen if we get a Trump presidency and more tariffs. People have written about slowing growth. You take it a step further and say a depression is likely. Talk us through your thinking.
Well, no, so I didn't say depression is likely, actually.
Possible,
but I
let's
said
say that.
So our job as asset managers is we have almost all we do is we address risks, either through hedging or strategies for addressing contingencies. And I think the thing that you need to look at, normally we don't know when things are going to happen or what's going to happen. And so we're blessed with a date. Right, so we have November 5th, and we know we have a date, but we don't know exactly how that's going to play out. The thing that I think is completely underappreciated by the markets right now is proposed tariffs. Right, so normally with elections, you're right. There's all this anxiety coming into a presidential election, and then it becomes a non-event. However, in this instance, if either candidate wins, they're going to have a hard time enacting policies because of the legislature, except tariffs. And so I just wrote a book. It's coming out in March, and it has a chapter on the Great Depression. And in the Great Depression, in 29 you had the crash, right? So the last 4 months of 29 were terrible. But then in 1930, there was the brilliant idea of the Smoot-Hawley tariffs. And those were put in place to protect American farmers. It was a terrible idea. There were 25 countries that retaliated. Larry Summers has said it made the Depression great. So I've created an acronym, MADGA, Make American Depressions Great Again. People are completely underappreciating the potential impact of the tariffs. And there were two things that'll happen. First, the first thing that'll happen is that everyone may reset their thinking around interest rates. And so we've all got this baked in assumption that the Fed is going to continue to lower rates going over the next 18 months, even before a president comes into office if Trump is elected.
So, Philippe, there's a lot to digest there in terms of the scale and the potential scale for tariffs. Tariffs at the moment are about 2.5% of GDP. The risk is if Trump comes to power, it could be anywhere between 10 to 20% on some countries, 60% on China. How do you prepare for that risk? You've already taken remedial action, but quantify what you do in the face of that worst tail risk for you, which is tariffs.
Well, a lot of companies are going to be in trouble because they've already taken orders for next Christmas. So they're just going to have to eat the increase in costs and affect their profitability. But as investors, what you need to do is address the contingency, right? The contingency that things could go very badly. So in bonds, what that means is prepare to be adaptive. We've already seen rates move up and bonds move lower. Prepare to reposition from investment grade or high yield into T-bills. For equities, adopt a hedging strategy or go into hedged equity funds or ETFs for at least half of your equities portfolio coming into the election, because you just don't know how it's going to go. Right. It could be another non-event, right? So you want to prepare for an optimistic scenario, but you also want to address the contingency that things move down significantly. And we think that there's a possibility of that post-election, if we ever find out who wins.
Felipe,
right?
there's also been a lot of digital ink spilled on risks to dollar, with Trump favoring a weaker dollar, but policies that are pro-dollar. Edward Fishman, a former U.S. sanction official, wrote in Politico an op-ed this morning saying that the risk isn't in using sanctions too much, it's in wielding them rashly and alone. And this lesson reveals that the next U.S. president's sanction policy could have serious ramifications for the dollar's global role, especially if the next president is Donald Trump. I wonder what you think about that, the challenge to the hegemony of the U.S. dollar, or even the direction of it. Should there be not just tariffs, but use of sanctions alone by the U.S.?
So I'm a little skeptical of that because, for many years, for decades, we've heard about the possibility of the end of the dominance of the dollar. So I think that one is a very big question mark. I mean, but what it shows is that everything is in play. And so what markets don't like is uncertainty around the dollar, around markets, around the Fed trajectory. And really, what are stocks? Stocks are really just, they're valued based on optimism. So all you need to do is go from optimistic to pessimistic in terms of what's playing out in the economy, what's playing out with earnings, and that could change everything.
Look, to a certain extent, the dollar, bonds, and to a certain extent, equities have some flex of a Trump win, maybe even a red wave. It depends on whether you want to look at the polls or whether you want to look at the betting markets. On the night of the election, we've just heard from UBS saying, don't do a knee flex, don't do a flex reaction, don't do a knee-jerk reaction. On the night of the election and the 24 hours after, what's the most important asset classes that you're going to be looking for as a signal and a signpost for 2025?
For me, it would clearly be bonds. So coming right into it, and as I say, we may already be seeing effects on the bond market of a potential Trump win. But I think that if the market readjusts and says, wow, the Fed may not be able to lower, we may be in a situation where we actually see potential inflation moving forward, and we see rates move higher than they are now, maybe even significantly higher. That would be the game changer, because then that would affect everything, including the economy and stocks, and we'd all have to reset our thinking around our portfolios.
Okay, Felipe, thank you very much. Felipe Toews of Toews Asset Management. Your views, we're counting down to that election. And we're going to stay on the election watch and focus on the race for the White House. But down-ballot races could prove decisive in how much power the next president really has. Joining us now with this is Billy House, Bloomberg's congressional reporter in Washington. Billy, look, the House is up for grabs, and it seems as if the fight is playing out in some pretty competitive races, both on the East Coast and on the West Coast. Republicans are now in control, but how many seats are really up for grabs for the Democrats, and how is it playing out at the moment?
Well, both chambers, the Senate and the House, are really up for grabs. Right now, Democrats control the Senate and Republicans control the House. The House is a war map of some 37 competitive seats. And Democrats just need to have a net gain of 4 seats to take over that chamber, and that could lead to the first black speaker in American history, Hakeem Jeffries. But you're right, cluster of seats in New York, most of them surrounding New York City, and out in California, in the LA area, in the Valley, those could alone determine which party will control the House. The Senate fight right now is tilting towards the GOP, and there's just a handful of seats there in a chamber that's now held by Democrats, 51-49. That could determine that. Everything's up in the air in this final week and a half or so, and of course, this all matters because the House and Senate have a great say on whatever presidential tax plans, Wall Street regulation, or border policies, or even naming judges will be impacted.
Billy, to that point, there's been a lot of questions, eyebrows raised, why Trump went to Coachella in California, why he's going to Madison Square Garden in New York City this weekend, and why Harris is in Texas. How much of that can we look at these places and say these are key for down ballot, and that's what these candidates are there for?
Well, I'll take New York first. There are those 4 suburban New York City races that Republicans hold those seats, but Biden won in those districts. So Democrats in New York, a heavily leaning Democratic state, believe those seats belong to them. And those 4 seats alone give you a net gain of 4 seats to take over. So that's why Trump and Republicans are in New York playing defense for those 4 lawmakers and others. Out in California, it would seem that Harris's base is there, and she's out there along with much of the apparatus for the Democratic Party trying to pick up Republican seats there. So both of those are kind of dictating these stretch run strategies.
Let's just talk a little bit more about the Senate. Currently controlled by the Democrats. If you just look at that, they've got 51 seats. They've got a number of independents that caucus with them. But the races that we're going to focus in on are Montana, Ohio, Nebraska, and Texas because of retirements. What is the most competitive battleground?
Well, right now, Democrats' hopes really hinge on retaining Montana, where Democratic John Tester is in a real battle with Tim Sheehan, and some polls show him behind. And again, the Senate is now held by Democrats 51-49, but really 2 of their seats are independents who happen to caucus with them. They can't lose Montana, and if they do, they have to depend on a real long shot upset for instance, a Republican in Nebraska by an independent. And then there's Ohio, you mentioned, where Sherrod Brown is fending off not only a tough challenge by Bernie Moreno, but that's obviously the home state of the vice president, nominee on the Republican side.
Okay. Billy, thank you very much. That is Bloomberg congressional reporter Billy House. Coming up, a brutal morning for fashion house Capri after a judge blocked its merger with Tapestry. We're going to have more on that next for you on your Bloomberg Brief. It's your Bloomberg Brief. Danny Berger and Manus Cranny here in New York. Shares of Capri are plunging in the pre-market. A federal judge has sided with the FTC to block Tapestry's $8.5 billion offer to acquire the fashion house. Capri owns brands like Versace, Jimmy Choo, Michael Kors. Its rival Tapestry sells Coach and Kate Spade. For more, let's go to Andrea Felstead of Bloomberg Opinion. Andrea, when most people looked at this case, they said the FTC is likely to lose. Just what do you make of the ruling that the accessible luxury handbag market cannot merge?
It's a real surprise. After the trial last month, the feeling was that Tapestry and Capri put forward a really compelling case, and that would go in their favour. So this is, it's a real turn up for the books.
So tell me this then, you've got 2 very different brands here. You've got Coach and Kate Spade under Tapestry, and Capri has got, some would say, the vestiges of the 90s. There were good things in the 90s. Versace, Jimmy Choo, and Michael Kors. What happens in this space now? Because they're trying to defend competition, but what happens to these brands? Will they survive?
I think Tapestry's in a much stronger position. Its Coach brand, it's done a really good turnaround. It's performing well. One of its bags, the Empire, is one of the hottest bags around this season. I think Capri's in a much weaker position. The trial really showed just how weak the Michael Kors brand was. It needs a lot of work. And I think, it's not clear what's happened. Does it sell to private equity? Does it struggle on and try and turn itself around? Coach is stronger. I think Capri is much weaker.
Andrea, does this have implications for the wider consumer goods and fashion industry? You look at someone like LVMH that has really grown to its size because of the type of acquisitions it's done. Is this a new era in that regard?
Yes, I think it is. This was such a narrow definition. You know, nobody really goes out, you know, to the mall and says, I want to buy an accessible bag. You look at, you know, all kinds of bags. So, you know, to narrow it down was really, really unusual. And the fact it's gone through is really going to be a factor in, you know, every fashion deal that goes through now. I think we'll have this in the back of its mind.
Andrea, let's see how it plays out. But for the moment, some brands under pressure. Andrea Phillip there of Bloomberg Opinion. Well, the leaders in policy and business are wrapping up the annual IMF World Bank meeting in Washington. Bloomberg's Lisa Abramovich sat down with the UBS CEO, Sergio Motti. Let's take a listen.
At the end of the day, the cost is paid by the economy, by clients. I think, of course, shareholders are suffering, but eventually cost of borrowing and the facility and the easiness of accessing credit is impaired. So allowing capital to freely move across jurisdictions creates less cost for the economy.
Is there a warning from the Credit Suisse saga? You've benefited from it on the other side. Your assets have increased. You delivered earnings that outperformed expectations. There is a sense that banks that seem okay are suddenly not okay in a very fast money world. Do you worry that that's the case elsewhere?
No, I don't worry, because if you look at the Credit Suisse situation, it was a very idiosyncratic topic that developed over the years. The business model was not sustainable. They didn't really have a great governance, and they benefited for too long from a regulatory concession that should not have been granted, or at least not for so long. And that was a quite unique situation. If you look at what happened back in March 2023, banks, large banks, were actually safe haven, were part of the solution, in a sense, in the US, but also with UBS in Europe. So big banks were solid, and it showed that well-designed regulators can avoid the repeat of the financial crisis. But if you go too far, then you create costs, not only for shareholders, again, also for clients. When it's going to cost more to borrow, it's going to slow down investments, and so that's not the ideal situation. There's a saying, and it's not mine, so you can't blame me or credit me, but that the United States innovates and that Europe regulates, and that seems to be the way and the path of travel, and it's the reason why a lot of people expect the U.S. to grow really significantly and less so in Europe. How much do you see that bifurcation continue with investor flows? Don't worry, I'm not going to disagree on that. So, okay. It's quite clear. You saw it in the last 20 years. Numbers talks clearly, and the underlying trend seems to go still in the same direction. There is a desire in Europe to change path. You saw with the Draghi report, with a lot of very comprehensive report analyzing the state of Europe, with a lot of ideas that, unfortunately, are going to be quite difficult to implement. The reason is that you need 27 countries with quite different interests to agree on a common goal that may result in some of them losing short term for the benefits of the long-term benefit. And in this environment, it's very difficult to get voters to support any sacrifice. And so it's likely that you're going to continue to see the U.S. outperforming Europe.
UBS CEO Sergio Motti speaking with Bloomberg's Lisa Abramovich. This is a man that you've spoken to very often, Manus. I mean, what do you make of him saying that the fragmented banking is an issue in Europe and there needs to be more consolidation? I find it so ironic that his former sort of cohort and buddy, Andre Orchel, who left so spectacularly from UBS, leading UniCredit, going after a bid after a German bank. But he has always been a voice that has said there needs to be more consolidation. Consistently, he has called for it. In the end of the day, he got his consolidation, didn't he, last year? I was going to say, Lisa pointed this out. Out of pretty rough circumstances. Yeah, well, he really benefited from it. And there were a lot of arguments that maybe it's not good at creating this Swiss behemoth, but UBS has operated really well and cleaned up house at Credit Suisse. Well, I can't wait to hear what he's got to say about the final banking capital regulations here in Basel III, because he's always banged this drum about the uneven landscape between Europe and the United States of America. So if those capital requirements change,
you're going to hear a lot more from Sergio Motti.
Well, certainly. I mean, we've already heard from Mario Draghi calling for more unions and European banks too. So the conversation's out there.
Okay, let's see whether Rochelle gets his hands on the German lender Commerzbank or not. Coming up on the show, we're going to round out the week for you. We've got more economic data. We've got Fed Speak on the slate for you. Every day, context matters with us on Bloomberg Brief.
It's your Bloomberg Brief. Danny Berger and Manish Cranny in New York. A look at what's ahead. Let's get you set up for your trading day on this Friday. We get U.S. durable goods orders at 8:30 a.m. Eastern, the new Mitch consumer sentiment at 10 a.m. Then one last bit of Fed speak before the blackout period. That comes from Boston Fed President Susan Collins, 11 a.m. And another Treasury auction this afternoon. Manis.
Danny, micro movers, Tesla's down pre-market. I mean, it did rally 22% yesterday, so bear that in mind. You've also got that journal story reporting that Elon Musk having a number of contact and conversations with President Putin since 2022. Western Digital is up nearly 12%. The computer hardware and software firm beating earnings expectations, and it's day 2 of a brutal day for Newmont, extending their decline, the biggest fall in more than 2 years. Investors essentially souring on the earnings and suggesting that the top gold producer is going to struggle to control its mining costs. I mean, day 2, brutal moves yesterday. Danny, good morning.
Good morning, Manis. I have a feeling this weekend, I know what I'm doing. I think I'm filling out the diagram of baseball for you. Is that my fate this weekend?
Listen, we've already done this, which is what, $20,000 for a seat at the Yankees game behind the dugout. What I need to know is, where is the dugout?
Manis, you have so much to learn. Listen, not this one, it's too expensive. We'll go to a game soon.